250,000 small business loans, 0% interest business credit cards for the first 6 to 18 plus months through the credit card stacking method, strategically adding one card after the next to get the most amount, have that advantage for your startup and non-startup, and apply these funds for a lot of things like real estate. You have inventory, marketing and advertising, manufacturing, equipment costs, for rent, utilities. You have a lot more that you can use these funds towards. I'll also be covering credit repair, a little bit of consolidation, and a bit more. But before I get into things, if this is your first time watching me, welcome in. My name is Michael with Viral Funding Solutions. I'm a business funding expert, a business loan broker expert, as well as pre-underwriter/underwriter. In other words, I help connect you to the best lenders, organization. By far, you'll get the best strategic partnership and roadmap for longer term, not just something short term and transactional. Perhaps you have to begin with the shorter term or some solution, a service, to then get you to where you need to get to. But I'm not the transactional type. It's people over profits for me. I very much do care about you as a person and your success, in your health, in your relationships, in your wisdom, and your wealth. So I put people first over everything, and your core values, vision, and mission matter to me. And I'm a very loyal person. I'm a Libra, if that says anything. Integrity galore, very trustworthy, reliable, accountable, responsible. You don't have to worry about these things with me. I'm not a salesperson, and again, I'm not transactional. And I go far and beyond to help someone, and the funding is just one and a byproduct of more of what I can do. And I've built out businesses, so I understand the complexity as a non-startup, as a complete startup. I've built out other businesses before I got into this one in the digital marketing agency, another in lead generation, one in health affiliate marketing, promoting many vitamins and supplements, many physical and digital goods. So then you could say I graduated helping people with CRMs, tools, courses, quite a bit more. And then I did other ventures, and then I got into the business funding space, which I've been in for many years now, and I'm up to date. Very introverted, analytical, cerebral type of person, not a wordsmith. Still daunting to be on camera here. I'm better at writing. So that's a little intro that I wanted to give you. I might come back to a little bit of my story, but I'll try to leave information down below if you have access to that, and I'll leave more information and resources that you can get in contact with me in the description of this if there is one, or you can click through my profile and find out more. I have a lot of videos that I come out with on all types of funding. So let's get into how does a 250,000 small business loan work? What does the process look like? For one, we have to look at what service are we talking about. But even way before that, we have to look at the fundamentals. The fundamentals are not what does your credit report look like, or what's your credit score, or have you structured your business correctly. That's partial. The bigger thing is, well, what's the biggest problem you're dealing with right now, and how are you going to apply these funds? And even way before that, you have to look at a character. See, what we don't know hurts us a lot. And what we assume as not true, we have this huge belief about. And if we're not willing to forego our beliefs for our betterment as a person and in business, that can obstruct and get in the way. So before we get into, well, what type of service, we have to understand more at a deeper level than just the structure and the repair or the credit in who is the person in power to go make these decisions. Characteristically, character traits, personality traits, a lot of that matters. Letting the ego go, letting the stubbornness, the ignorance, the arrogance, the cockiness, this bad attitude, rotten apple type. Why? Because that can cause friction and resistance, not only in the process, but in anything in life. And so you want to be the best version of yourself. And like I've worked on personal development and growth as a person, it's all up here. And having an academic background, I studied a bit of sociology, I played Division I soccer, but then I went quickly into chemical engineering. I have a very system and math brain, and so I focused on that for some time, and then I got into the business side. I wanted to start a business like a lot of us want to change career paths. So I went into there and I got my degree through that. I've worked in construction, manufacturing, warehousing. I was even a ramp agent in my younger 20s, believe this or not. I did other roles. I was in financial logistics for a huge contracting company servicing HP and P South that unfortunately went down under. They relieved 50 plus people. I was one of them. I had to go back on unemployment benefits and food stamp cards. It was not a good feeling. Again, not even being able to look the person at the register after purchasing for my groceries. Grateful and thankful, but knowing I'd have to come back. Even going out for a meal was very troublesome. Even when my family wouldn't tell you I was a burden, that's what it felt like to me. And I felt like I didn't want to continue to let my family down. So there's a little bit of that. And coming back to things as I went off on a tangent, the 250K, what service are we looking at? Now when we get to that level, okay, we understand our needs. We understand what our biggest problem, what's our roadblock, what's our questioning, what are the outcomes that we want. So once we understand what our use of funds are for, do you really have a handle on what ROI, if any, you're going to generate from this? Like I said, I look over a lot of things and I look over my numbers in my businesses. They're my babies. So I'm very up to date and very high business IQ, I would think nowadays, and people would mention. But a lot of us, we don't have that to begin with. And I was once there, don't worry. But there's growth. But that will help you understanding your numbers. Because if you come to me and tell me I need inventory, but I also need to purchase a building, I'm a startup, need to purchase a building, I need inventory, and then I'm going to have maintenance costs for machines. I'm going to need to purchase these machines. They're too old. Like, there's too many variables already. And if you're a startup, getting $250,000 with that many variables and no cash flow, no revenue to back up that you've done something of a magnitude of this project, even if you haven't, you can't prove it through your revenue and your growth. You're not in that stage. Or if it is, you're not getting enough margins out, gross. After all that, the net, what you have to pay rent, you have all these different expenses, and then what you're left over, you don't have enough profitability. It makes it an issue for anybody to lend you. So let's start off with the startup then. As a startup, you have quite a bit of options. You see there are microloans out there, there's angel investors, hedge funds, private equity. I can go even deeper. You also have 0% interest business credit cards and through creative credit back funding. This is simply where we can try to combine a personal and business combo. Personal could be a personal loan, personal term/installment loan, and then also a personal line of credit. It can also be personal credit cards. Whether that's at 0% interest or not, that's yet to be determined. And that's on a case by case. When I look at different files, I read credit reports, bank statements, tax returns, P&Ls, debt schedules. I do it all. Like I said, I'm introverted and I enjoy the boring work. I enjoy sitting on a computer now for many years and doing my own math, my own calculus, my own, well, not calculus, but addition by subtraction, multiplication by division. Okay, I keep it simple, but I do a lot of my number stuff, cash flow, debt service coverage ratio globally, personally, and in business, profitability analysis, and there are a lot of different numbers I don't want to bore you with in getting into those subjects. But there are 0% interest business credit cards if you're a startup. And what this essentially is we're not just going to try to get one card. Why would you get one card? Try to get 100,000 on one card as a startup. How's your credit look like? Do you have a history of age in your credit profile, and how much? If not, what do you have? Is it authorized users? You're on somebody else's account. Now, if you have a thin credit profile, even if you had a strong enough credit profile to get 100,000 on one card, it can take a bit of work and it's much harder to do. So instead, what we do is we add 3 to 4, maybe 3 to 5 at once in one sequence, or maybe less than that if that's what you'll get approved for. But understanding your credit report, I can give you a better answer as to what ideally I'd want to go and help you get and what cards, but there's a little bit more intricacy to that. So instead, when you can't go get this revenue-based loan, you can't go get something from a bank term loan and the SBA loan, which they work on startups, but you're going to have a larger equity injection. You're looking at 20 to 30%, if not more, sometimes less if you have experience, but 20 to 30% a lot of the time. Some of these other things like grants, they can take some time. You can have that on the background, but here you have these cards that we can add as a startup. And if you have like Chase cards already, do we look at getting you a Chase business credit card if you don't have one? Or if you already do, should we do another one? Then we go to American Express, then we do go to Business or Bank of America, excuse me, and then we go to a few other ones, depending on your credit profile and the makeup of it. So without going too much into depth on the credit card stacking for startups, because I've created a lot of video content on this, blog content on it. I'll try to leave information down below if there's anywhere for you to check out. Maybe you can click through to my profile, go to my video, or go from there. But the process is very simple. You're going to want to, well, let's start talking about the qualifications first. Anything at 250,000, it is hard to do one card. It might not even happen the first time at all, even with 3 to 4 cards. And if you have a strong enough credit profile and you have extensive history, then getting you that is not out of reach. But now we're looking at stronger credit scores, stronger credit profile, and age, way over 4 years a lot of the time, and sometimes less, but it just depends on the average. It depends on the total of each one of them as well that we're looking at individually, and quite a bit more of what you've already added in history in the past. Revolving accounts, installments, there's a lot of other things to look at. But what we want to look at for credit card stacking is 700 plus credit on all 3 consumer credit bureaus. It used to be 680, perhaps a little bit different back then. But as the market has changed, you looked at inflation and things coming down, and you're seeing things changing and everything going in different ways. That 700 credit score on all 3 is what we're looking at. If it's anything less than that, not too far, but if it's due to high utilization and it is understandable and how we can clear this debt, you potentially could still get approved. But if disqualified and if it's only due to high utilization, you're overextended. So we'll want to clear up that debt first, and we'll say you can qualify after you have this balance down on these accounts or in this account. And this is what we would need for you to do. And if you don't qualify, well, there's reasoning behind this. 700, you want to have no more than 4 inquiries in the last 12 months. Sometimes you hear no more than 3 in the last 6 months. Otherwise, that's flip-flop, no more than 6 in the last 3 months. But ideally, with the credit card stacking and the best opportunity that I have for this, and I vetted a lot out there for your best interest and to also get the most amount, no more than 4 hard inquiries in the last 12 months. Does not include secured inquiries like auto loans and mortgages. So there's that part of it. There's a little bit more to the credit card stacking, but I'm going to transition into a business loan here. So just know that, and if you want more details, I'll cover the rest of it with you in time. And there's things on what the amount in the limit you should have on a credit card, on 2 credit cards, amounting to 10,000, and how many revolving accounts. But I'm not going to cover that for the time that we have. And like I said, I created other content already around this. I'll try to link it to you. So to get an actual small business loan, we're thinking bank loans when we hear that, APR, prime rates, SBA loans. We have to start somewhere else if you can't qualify for those. So 250,000, how do you get to that? Well, for one, what kind of revenue does your business bring? What does the cash flow look like? What do the deposits look like? What are the average daily bank balances, average monthly balances, ending balance, starting, middle? And so after looking at a lot of bank statements, looking at a lot of tax returns, personal and in business, so much more, I understand very well the ranges most people will qualify in. But what most people get lent to in the revenue-based space is about 10 to 20% of their annual gross revenue is what you can expect to see. Now, if it's like an SBA loan, maybe even a bank term loan, there are other contingencies. Like the SBA, they'll factor in collateral, the bank term loan, and this is FDIC, that they'll look at blanket lien. So they might not take the collateral and that won't be needed, but they'll look at it and place a blanket lien. You have a UCC lien, usually on all business assets or as much as they can put. In the case of a default, if anything happens, they cover themselves. So there's that. But 10 to 20%, if we break it down to a month to month and what you're projected to make and grow and expand your business with these revenue-based advances, and these are what are advanced to you based on your future receivables that you're paying back the lender, then you're looking at somewhere between 25 to 75, 50 to 75, 50 to 100, and even 50 to 150. And then lastly, 100 to 200% is what can be lent. Now that'll factor in again into your balances, that'll factor into your credit assessment. Credit is less of a requirement when it comes to a non-collateralized small business loan. And again, a lot of these are called merchant cash advances, not technically a loan. In some states they are, but this is again based upon your future receivables and what you'll be making predictably in your future sales and your revenue. The lender is taking a portion of that. So you can see a percentage as your sales go up, a higher percentage gets taken out. As you make less gets taken out, none, likely none. Now, there are others that are based off of daily, weekly, sometimes bi-weekly, monthly, but those are very rare to see bi-weekly and monthly, so don't expect those. Usually they are daily and weekly. So you know what's getting withdrawn out of your account every day, every week. Now, if you get daily or weekly, it depends on your underwriting. And so with these said that are not bank loans, and I'll try to cover that in a second, is you do want to fit a criteria. So if you don't have above 600 credit, if you don't have above 6 months and above 25 or 25,000 minimum in monthly revenue, getting a weekly repayment is going to be harder. Anything underneath that, you ideally are going to be going through daily, even if you're 25K and above, but your credit is not where it needs to be, your time in business and other compensating factors. Perhaps you have other advances, other loans in place, or too many negative days and the industry and the market, the way you're depositing. There's so many things to look at. But to get 250K again, you want to get closer to 250K, closer to 200. But in this market, you want to be at least 240 to 250,000 in monthly revenue to be getting at least 250K. A lot of lenders are conservative, so that whole 100 to 200%, 50 to 150, 50 to 200%, if you get less than that, it's because you're generating less revenue, and then there are other things to understand part of your revenue, your cash flow. So that's what I would say to get that 250K with these services. Get closer to that amount that you want. Get that as in terms of what you're making. Now, it doesn't have to be the exact number. It could be 200,000. Somebody wants to lend you 250K, if not more, because of the balances, because of how strong your revenue is, how much you're depositing. They love it. They know predictably. I know predictably where you're going to be, especially if you take this money and you make more with it, to get then more over time. So that's another part of it. You have the bank loans. Oh, but let me, before I go into that, a little bit of the requirements like I did with the credit cards. And again, there's more that I can show you, but because of time here, is you can get in with as low as 450, 500 plus credit. A lot of the times we want 550 credit, and it depends on the industry as well. That's better preferred. You want to have average daily bank balances of 1,000 plus. A lot of days we're seeing now 2,000 plus, but if you have anything less than that, just lesser revenue, it should be okay in some circumstances. Not all the time, depending on the amount your revenue is and what you should be upholding, and quite a bit more. You're looking at least 3,000 in monthly revenue, and on your lowest month in the last 90 days, so the last 3 months. If it's another service in a specific state, you probably need 5,000 in the last 4 months, last 3 months. Other times, another lender is looking for at least 10 or 15,000, 25, 50,000 and above. So it just depends on the lender you go to. So there is that. And again, without covering every bit of this, I want to go into the other part, and I'll share with you more in time. There are bank loans. Bank loans require more documentation. So the ones over here can require 3 to 4 months of bank statements, a copy of your driver's license, and a voided check. If it's anything over 100, maybe over 150K that you get approved for, and you wanted to accept that, then maybe they'll ask for a P&L, current P&L, balance sheet, recent tax return, etc. So it just depends on where you want to go, how fast do you want to move, and are you eligible. Bank loans, documentation-wise, are more medium to heavy. With banks, with SBA, they get more heavier. Bank term loans, bank lines of credit, equipment loans, things like that. Anything you're working through the bank, even an FDIC bank, they're going to ask for 3 years at least of personal and business tax returns. If you have 2, perhaps we can just look at 2. Maybe it takes 3 to close, but we'll look at things. About 6 months of bank statements, 6 to 12 months. They're going to want the current year-to-date profit and loss and balance sheet, even the last year, maybe the last 2 years. Interim things, if so. The SS4, copy of your driver's license, voided check, and quite a bit more. The application to fill out. If you have more owners, that can push things out. That's where it gets a little bit more, is when you have multiple owners, and anybody over 20% or so, to guarantee it, And even if somebody's underneath 20%, that'll be then asked for each individual's credit reports and who needs to be put on the application. All this stuff I'll cover with you in time. Debt service coverage ratio of a 1.15 or 1.25 global. So do you have enough debt service right now that you're covering to manage your business, to grow your business, to take on new debt with the old debt if you have anything? Consolidation too. Do you have enough to consolidate if we had to consolidate to get a new loan and on top of what you currently owe? That can be hard, what you're refinancing, what you're not refinancing, what you're adding in part of the debt schedule. But those can take 680 FICO on all three, and that's FICO 2 that they're looking at primarily. Sometimes 8s, 9s, they intertwine and they'll add a couple of others in their assessment. But other times it could be 620 with compensating factors like your negative days, you don't have any or very little, it was long ago, non-sufficient funds, balances. Cash flow ideally has to be stronger to compensate for all of that. And tangible assets, even if it's not collateralized with a bank loan, then it has to have enough value. If the cash flow is not as valuable, but you have the collateral to at least put a blanket lien on, and that's as valuable, perhaps the lender will try to help you. But it's going to be hard. Other lenders looked at 660, and you have to have a FICO SPSS score of about 145, 150, 155, etc. So it just varies on the lender, and I have the best in this. Profitability does matter quite a bit. Cash flow matters a bit. Reporting profitability. But what's most important nowadays is what you'll be projecting in profitability. So even if it is low as previous, it wouldn't always be accepted as easily. But if it is low, but you're projecting to make enough and in cash flow, and I won't give a number until I understand your business better, and then I'll say, okay, this makes sense. The lender will actually like that. And based off of this will be your customer acquisition costs. This would be your gross profit. This would be your lifetime gross profit value. What's your lifetime value? A lot of you may have not heard of these before or do, and you understand how to, or you haven't gone around it, but it's very important when you're looking at a product-based, a physical product. There's digital products, there's a service-based or a membership-based business, and you have to understand how much does each customer, each client bring you. You have to factor in the labor costs in advertising. So what's your actual ratio look like? You might think you're generating enough in revenue and you're making enough money from one person that you're acquiring and how much money you spend to acquire them. But what you're making out of them is less than what it cost you to fulfill. So if you're getting 50, but it costs you more, well, you're going to look at that and you're going to be in less profit or no profit. And then over time, how many people you're bringing in, how many people are you retaining? So I'm not going to get into all the business math right now. There's so much I can give you. That's another time. But yeah, that's what you just need to know about with the bank loans. $250,000 in annual gross revenue. That's what we're looking at, and that's what we prefer. Anything less than that usually gets disqualified. It's just hard because if you're coming at it from, I have only 2 years in business, and you do generate that, the last year you generated less than that, or it's fluctuating. More was the last year, and then the one we're going to evaluate tax returns on and more is lesser. Like, that's not a good sign. That's a declining revenue trend. And if you have a good outcome where you think you're going to come back up, but there are too many variables, cost of goods sold, cost of fulfillment, you're already losing clientele, you don't have enough of a plan to get enough people, it doesn't look concrete enough, a lot of them will decline you or they're going to give you very less. So those are a few things. 2 years time in business usually is it. And there's a little bit more. Like I said, I can't cover every single service's exact qualifications right now because of time. Now, I'm going to get into an SBA and then I'm going to transition into credit repair. SBA loans, somewhat similar with documentation. They're much heavier. Personal financial statements, whatever we're doing, if it's a 504 loan or anything else, building involved, environmental, appraisals. There's quite a bit. Is it in a rural area, not a rural area? Are you factoring in the real estate into an acquisition, into the startup? What would that do to your equity injection, liquidity? How much liquidity should you have left over? What do you need for working capital, for fees, for so much more? But if you're a startup, you're looking at about 25 to 30% equity injection, if not 20 to 30%. And that 30% climbs. It can be 35, 40%. How? You don't have enough meat, enough skin in the industry. You don't have enough liquidity. You don't have enough savings. You don't have enough in the account for reserves. And there's a lot more. So if you needed to go that route, you can look at a cash out refinance. And I do quite a bit of that too with commercial real estate or any real estate that you own, investment real estate, free and clear, ideally. And then I can line up what the rates, what the terms would be. And a lot of the times I look at a lot of these files and they can get done. It just depends on how complex you want to make it. How sooner would you like to have this done and closed? And again, like I said in the beginning, a lot of what happens is people get in their own way. So getting out of your own way, letting your own pride in terms of is it right or not, and letting somebody else who's an expert assess and give you the right feedback. And I won't overpromise and I won't underdeliver. I promise you that. And the thing is, so many people online are searching for a solution and they go the wrong direction. You keep giving people your credit. Don't do that. Even if it's a soft pull, now they have you in their system and they might just be sending this off to third parties and you didn't even know it. Now you're getting contacted. Even if they're not, it's not the right solution to have on file. And people now contacting you, reminding you over and over again. And then you get so tired, now you just had to select something. I get those answers. Don't be that person. And so protect your credit, even if it's at a soft pull level. Too many inquiries hurt you. And you may not know that. And other people might put you on the data merge, put you in fault of something that you weren't aware of until you went to apply. I have a lot of people who go through that. They can't get relieved from the past company that put them there. They won't say that they put you there because they don't want to be held liable. So be very careful. I don't do these practices. You get the very best through me. SBA loans require a lot of that. Credit-wise, a lot of it can be 675 and above. On all three, ideally, on one score, Experian, we'll look at in value. 700 plus is best though right now in the market. Other lenders look at a 650, 660, sometimes lesser than that. But it's really hard with other compensating factors, like I said again, stronger revenue, historical patterns, and profitability in cash flow and EBITDA, management of the business, assets of the business, what's on the balance sheet. So they're going to look at that even heavier than they would have if you would have had a better credit score. But that's the case. 2 years time in business, or sometimes 3 years, depending on the lender. Be careful of being delinquent on your past payments, making your payments. Bankruptcy, they don't want to see that. Anything in the last 1 to 5 plus years. Used to be like 1 to 3. A lot of times you see 1 to 5 plus, even more than that. Even some don't want to see any bankruptcies showing at all on your credit report, so that needs to be cleared up. Missed payments, you have to be careful. Sometimes that can be overwritten and helped, but if you're not current on your other payments, why would somebody lend you more money? If you miss 2 payments in a row due to these advances, that's going to make it hard to be current on the new one you'll take, even if the repayment is much better than the one you're currently in. And if your cash flow is suffering due to that, and you can't meet the demands of the bank term loan or even an SBA loan with the debt service coverage being at a 1.25, 1.35 in some cases, 1.15. But that's kind of more or less what they're looking at in the assessment. Revenue ranges, I'd ideally go for 250,000 and above, kind of like a bank loan. Anything underneath that, there are some options that are available, maybe up to 50K, up to 150K at most. 200K in the market. Before I would have said 300K. But it's going to be a lot harder and you're going to have to show profitability even more. Cash flow has to be strong enough and a few other factors. So I'll leave it at that. There's more details. Oh, FICO SPSS. You need to have the right liquid credit score. Like I mentioned earlier, a 155, a 145, a 135, more or less. And this is an assessment of how well you're making your business payments. How many payments? How well are you making your payments? That's what the lenders will look at and they'll factor in. They'll look at a lot more in your risk assessment. I've seen a lot of business credit reports and the risk assessment and how close somebody is to defaulting, missing a payment, going bankrupt, becoming delinquent on an account. There's so much more to look at. So a lot of us, we look at these things and other assessments in the bank loan space, they might not assess business liquid credit score as heavy or they might have a lesser requirement. Okay. Let's get into consolidation and then credit repair. We'll do it that way. If you're somebody struggling with merchant cash advances, And I mean that in revenue, cash flow, a lump sum you've been given, not what you get out of these credit cards. If you've been tied up and your available cash flow is restricted due to your merchant cash advances and even other business debt, if you can't even take on a salary and pay for your own bills, and that's been amounting, if you can't meet other debt obligations because of the current debt that you have, you're close to facing a bankruptcy or a default, you want to avoid a past default judgment in place, or you've been there and you still need the help, this is going to help in many ways. There is the debt consolidation, but you have to be careful with the companies out there. And there are many of them who will put you in a default only to say they'll help you, only to say they'll restructure you have assets, so we can work off your assets and get you the money you need there to consolidate. And be very careful. Escrow things, be very careful. There's right and wrongs to that. And others are just pretty bad. Their communication, they're transactional people. You don't even know who they are. As a person first and then in business. You don't even get that because it's all 9 to 5 mind. They're not maybe a business owner, or they are, but they don't get it. And right here, you're working with an entrepreneur, somebody who understands people. Being introverted, it's always harder for me to be the most personable. But if you were to ask people, and I've heard what attracts them to me, it's not only my content, but it's who I am. And you could say it's how I've made them feel. And it's like a home for you guys. It literally is. And I would put my arm over your shoulder. Yeah, over mine. And it's like I wouldn't even be the business funding guy. You wouldn't even think that. It's like just a family member treating to another family member the right way. And I'm very calculated and I'm diligent in my thoughts and making sure you get the best, so you're in the right hands at the end of the day, and doing it ethically. Like, again, if I was in your shoes and I was struggling with a lot of stress amounting every day, I had to wake up, I'm out of my habits and out of my routine, and I have people in my ear all day, and I'm going through a divorce or whatever it is. I'm not, but if there are many issues, I want to help you improve. I want to help you be better, not only because of those reasons, but better as a person. Give back, do more. Have your health, have your relationships in line. But consolidation is one thing. If it makes sense, we can try to consolidate it underneath a bank loan. Perhaps an SBA loan gets involved. Maybe a personal loan if it's business debt, or if it's other type of debt that we can try to consolidate underneath a personal loan, credit cards, etc. Mask that underneath a personal loan. Clear it up with business debt, revenue that you're bringing in. There's quite a bit of different strategies. Cash out refinance, like I said earlier, we can try to do that. Knock that off the books, however many you have. Bank loan, like I said again, though, is one of the most structured ways SBAs work. They might not want to consolidate more than 2. Others changed their policy not too long ago that they won't refinance any kind of merchant cash advances. Perhaps they'll look at other debt that's in the business, not the personal debt, but if it's manageable. So there's that way to go about it. There are a few more strategies to use. I would be here for hours if I dove into each one of them, specifically terms, rates, and so much more. You also have a reverse debt consolidation. These companies, you also have to be very careful about. They will give you another loan to help you pay off your current one, current positions that you'll be making payments to. They'll give you a larger one to make the payments to this. They can help lower your payments, but now you're ending up with a larger payment after that is cleared. So it's like you're owing the same thing that you owed initially. And if you're in that same problem and you can't make the payments on it, default, there's a lot of issues. You don't make enough revenue, and these can be higher rate. That's the big issue. So the point of it is to get a lower rate. And again, there are many different angles of doing this. And what I recommend at the end of the day is doing a debt restructuring or settlement. So I do a lot of debt restructuring right now and a lot of settlements. And I have a specialty law firm I believe to be the very best that I've vetted, and then with the team, and an attorney-led debt restructuring team that will fight for you. Like you as a person in your business, that will go above and beyond and understands and has a lot of years and decades of experience, payment analyst team, monitoring, having the right exit strategy. I'm doing a lot of stuff behind the scenes with them, just so you understand this. I get the numbers, I understand the contracts, quite a bit of work. And so lowering your payments on average 40 to 75% plus, or 50 to 75% plus of your current monthly obligations, even if those payments are not monthly, but lowering that threshold helps you. So a lot of business owners, they end up saving 100,000 plus. Of course, if they have a larger amount, but if it could be 40,000, 30, 20,000, what would you do with that amount that you've saved? I'm sure you would do a lot. Put it back into your business inventory, purchase a piece of equipment, have this as a down payment, have it as bridging cash flow gaps for the next month that's coming up. You're getting 4 more people, 5 people left. I need 4 more to come in. Each person is going to be valued $600 each per customer, and then they're going to buy another product in about 3 months. So then I'll get $1,200 in total from each. So then you start looking at how do you optimize those systems, your marketing system or whatever it is. Now you have extra to invest it into different revenue streams. You're testing. I need an additional 5 to 10,000 for these contracts. They're waiting for me. Until I have the money, then I can go ahead and negotiate this correctly. Or if it's already done being negotiated, renegotiated, or if it's already cleared up, now you got to move on to the next project. So there's quite a bit of that, and lowering that, settling the payments, that's also there as well. But those are the recommended ways that I would go about it, and I've done quite a bit. So it just depends on your unique needs. Now, let me go into credit repair, and then we're going to close up shop. Credit repair. A lot. I do so much with this. I used to do a lot of it myself, but now I outsource it to a person who's an extreme expert at what they do. And I have an amazing personal and business relationship with him. I spoke to him today, actually. And I was over the phone with him. And I'm not a phone person. Like I said, I'm very introverted. I have everything I can do to avoid that. I will. But I excel at the same time. So I can handle that better than most people. It's kind of strange, but it's because I've built a skill set and a tolerance level. But we can do things in another way. And for those of you wondering how to get started really quickly, I'll have a questionnaire form down below if there's room, or click through to my image or however. But down below, there will be a questionnaire form for you to fill out. Once you fill this out, I'll be able to then analyze, evaluate it, and give you a proper email response with the PDF included, showing you your best funding option and options, thoroughly broken down. Sorry, lighting. And even showing you information that is not publicly released, giving you information on credit, cash flow, collateral, liquidity, equity, credit repair, business credit building, lines of credit, vendor credit, accounting services perhaps, processors if you needed that, trade lines, everything that you need to. You can reuse this PDF, come back to it at any time. I give you multiple options under different services, and I tell you where to look. This is the best place to get started. You can qualify and disqualify yourself, all the details that not a lot of people are sharing with you. Application, documentation submission, how to do that. Is it a link so I get it on the back end for review? Is it different where I'm going to ask for it this way in the email? I make it so energy and time efficient for you where you literally don't have to have a second thought. Being an entrepreneur, that's what we do. I problem solve, and making sure we're very energy and time efficient, very respectful with one another. I'm very nice, so whenever you hear somebody having problems, I'm not perfect, but I've been in this so long to know that, is it me, or I worked on myself so much and I know my stuff. Usually it's the other party that holds themselves back. So I have your best interest at heart, don't worry, but I want you to be in the best place, mentally, spiritually, emotionally, not just emotionally impulse, although there are times for it, depending on the product service, but making that well-informed, calculated decision. So coming back to this credit report and credit repair, I've seen a lot in my time. And there's a process to that. You can also fill out a questionnaire form. But whatever you're struggling with, and each person I cater to differently. I have emails to get back to email people about their situation. Are you just missing one payment, 2 payments that they shouldn't be reporting? You've made the payments, they're still showing and displaying after a dispute initially you did. They hadn't checked it. They didn't remove it correctly. They didn't accurately report your credit. So it's been past 30 days and your delinquency has been paid. Like, these are the things you're struggling with, and perhaps they didn't report it correctly. It wasn't knocked off. You need to go ahead and put in a dispute letter. You doing it on your own, you can try to, but generally that backfires on most people, and they don't know exactly how to put it. They just read information online or they hear it from someone. You actually want to outsource that. If you don't have anything in-house, outsource it to the person who deals with this all the time and knows how to put these dispute letters correctly and how many rounds at a time that they need to do it. Is it 1 round, 2 rounds, 3 rounds? Other companies are going to charge you for more rounds, for upfront fees and things you shouldn't be paying for. They don't give you a full credit analysis. If you want advanced Metro 2 disputing processes, a full credit analysis, reporting, monitoring, being taken care of, safety and security, then I'll recommend to you what I have and I believe to be the best, and I've vetted a lot out there. So there's that on the credit report and I keep saying credit repair, but there's so much more that I can cover. But it's just based upon each scenario and what I look at, and then how long does it take for you to improve from one credit score to the next. 500 to 700 maybe takes 10 to 12 months or less, more or less there, but it just depends again on what you have. And is anything guaranteed? Nothing is. Are we guaranteed to be here another millisecond, another second, another minute, another hour, another week, day, month, year? We're not given next day. We're only given right now. So it's more important and more pivotal that you don't put things off for another day. When you need the funding, when you need the consolidation, when you need the repair, you take care of that immediately, because it's a domino effect. Because I didn't take care of this, I won't be able to get a loan for this, or I won't be able to pay a tuition for my son, or I won't be able to get a home for them or for me, and then I can't purchase this truck, or there's something else that happens. There's a domino effect, and the sooner you take care of it, especially with consolidation, with relief in debt, that's the most important thing. And looking away from all of the distractions, the faster you can do it, the faster you'll get relief, the more cash flow your business will have, the more and less strain, the more and less bankruptcy you can get into, or default, or if it has already been there, that's another thing, bankruptcy, etc. But yeah, that's what I wanted to cover in this video. There's a lot more that I can get into, and like I said, I didn't cover each service specifically, and there are many more that I didn't cover. It would take so much more. It would take one individual video, and I've done quite a bit of that in the past. But just understand your options are there. Are you limited? What do you bring in terms of fundability details? What do you have in terms of assets? If you have no revenue, no credit, no cash flow, but you have desirable equity invested in property, you or a friend or somebody else you can also piggyback. I've had that a lot. I've had people start businesses with cash out refinances on the commercial side. You do residential, but a lot of people want to protect that, or it's not enough, or it's not what they want to do. Commercial. Hey, I have a friend who does, and they want to help me start my business. I'm actually going to use that towards building costs because I can't get this through an SBA. So I'm going to do it this way, and then I'm going to go ahead and get the rest of the funding through 0% interest business credit cards. I have strategies for you guys, and it works a lot of the times if you pay attention. A lot of you steer off in your own ways, and again, that's letting your own ego take over. I'll handle the hard work. You've been through enough already. Let me handle the hard work. Believe me, I take care of that very well. The personal and business relationships that I built, I'm very respected. In my space, I'm very nice. That's just who I am as a person. I'm not putting up a front. And yeah, there are different methods of doing it. But yeah, you'll look at assets if you don't have that, cash flow if you don't have that, but do you have the credit? Is there any other form of liquidity, equity, 401k, IRA financing that we can do perhaps for a startup, non-startup, turn things into working capital, withdraw at least maybe 50% if we could, if not more. The situation varies. You have revenue but not the credit. Well, that's going to knock off the SBA and the bank loan until you get to where you need to get to and be levied. So over here, now we work off of your existing cash flow and what you'll be generating in the future. You'll have credit without cash flow, without the assets. Oh, wait, you have the assets, but you don't want to use it. You can't. There's not enough. It doesn't make sense for you to do rates, etc. 0% interest, how you're going to invest the funds as well. It's not just the building, but it's actual quicker profit. It's actually something that you won't be investing into your lease agreements, restructuring agreements, only paying a majority of that. Your ROI will be affected because of it. So there's quite a bit. Collateral, but you don't have the other ones, cash out refinances. We can look at what kind of current revenue your business has, if so, and we can base it off the liquidity. So inventory, account receivable financing, AR lines of credit, and there's so much more. Appreciate you guys. Thank you for joining me. If you did get value from this video, I'd greatly appreciate you giving it a thumbs up. Please feel free to share it with others. If you don't, it's okay. And if you have not subscribed, I'd greatly appreciate you subscribing, clicking the bell notification icon so you do not miss any future content, and be the best version of yourself. Be the best version of yourself in your business. Gerardo, saludos. I hope you're doing well. And like always, keep rocking and rolling. Don't let little obstacles, even if they're bigger obstacles, get in your way. Work up here so you don't ever have to worry about something like that. You can rebound. You have the skill sets already to do it. You maybe just have to change platforms. It's a processing issue, processors, better accounting services, financial literacy, just the education. That's what you guys need to follow up on. The foundation is you as a person. Next to that is the education, the financial literacy, the accounting services. Are you understanding of your payment processor or processors? You understand how all that works? Do you understand other parts of your business, tax preparation? There's quite a bit more. Bookkeeping, I can go on and on and on. The foundation of your business set, to then the credit, to then the cash flow, the collateral, liquidity, and equity, and much more. Yeah, and it happens, Gerardo. And anybody in here who's listening in, he's saying that he's all good. And Gerardo has been somebody who's been with me from the very beginning. Very sincere, great person. What he's doing in his work and his business, what he's striving for, what he's already shared with me in video and non-video. Very open with me, and I have a great relationship with him. So it's amazing whenever I do get to hear from him and then others. And like I said again, I do care for you guys. I don't look at you as a transaction. I give you guys pointers and tips like I did with Gerardo on equilibrium, on he was trying to factor in with sales if he got to this point, growth. There's a little bit more to share with that though. And so he's the turtle. You know, we move slow. We move at our own pace. I spoke to a lady, Gerardo, not too long ago. I was on a walk, and she was in trucking, not any longer, retired, and she heard the engine of a truck, and I crossed roads with her, and she started telling me about how that engine was, and I was just light conversation, small talk, and she used to drive big trucks. And then she went to the mailbox and we spoke for a little bit more, and she told me about her history. She asked me what I do, and she was very intrigued. Told me about her sons. It was a great conversation, but just getting to know that person from different points of view and helping her understand different points of the perspective that an entrepreneur has in life too. She's overcome a lot. And I told her how slow I am. Immediately she goes, slow doesn't mean slow. It doesn't mean bad. I let her speak. I agree with you. And like you said, so I just spoke to her on that because I've delayed instant gratification. I am very patient. What a lot of people don't have, I have. And what people have, they project to someone else. And that isn't right. So like I said, it's all about working on yourself. The harder situations will pass. Believe me, I still have my hard times, but I don't linger on them. Or I know they will subdue, they will pass. Don't let the thought consume me, because I've seen this before. Even if you haven't seen it and it's something new to you, you've got yourself enough together. And don't even look at it from finance or money could help it and solve it. No, it doesn't solve everything. What solves everything is how you handle it. How will you handle it once you have it? See, you're going to carry on. You might find relief, but because your character, you internally didn't focus on the things you needed to change for that outcome to appear at 100%, even if it's 60% margin, 80%, or if you're in IT, technology, fintech, Silicon Valley, you might see 100%. Okay, I'm getting too far ahead now. But yeah, just take your time, work slowly, don't be the hare. The turtle wins the race. And with QuickBooks and general journaling and journal, I like to say that too, entries from zero. Yeah, that's how it begins. I'm not gonna start getting into the QuickBooks. I use two. I've used FreshBooks as well. That's one I began with many years ago. HoneyBooks, I've used them all, and I know exactly for my businesses like what I got to do to have these reports accurately, on time, reviewed correctly, invoiced, payments collected, so much more. But yeah, Gerardo, slowly take your time, sit back, relax. When you have the time, look it over again. And what I always tell people is take it in bite-sized pieces. Don't overwhelm yourself by having to learn everything of every module, every lesson in that module. Take the second to one at a time. Can I implement this? How much will I implement? Can I only implement 25%? Why can I only implement 25%? Is it because of your time? You're limited on your resources? There's a lot of little things to look at, but it's all, again, guys, educating yourself, staying up to date on your market, your competitors, understanding your unique selling proposition, creating a better and stronger marketing system, processes, systems, the right amount of automation. If you have that, not always will you have it 100% or have it at all, but that's what I recommend. And so that's what I'm going to leave it at. I know I was supposed to get going earlier. Appreciate you guys. Thank you for your energy and time. Thank you, Gerardo. Thank you, everybody. Even if you didn't comment, appreciate you guys. I'm that guy who goes to a room too and I don't really comment. I'm an observer of people, very much up here. And so appreciate you guys. Thank you for joining me. Look for all the resources in the description, bio, but description, more information. And that'll be everything for now. Take care, guys.